Alrighty. Good morning, everyone. That's right, Terry, let's get it. Ain't much left to do it here. All right, guys, so brand new week coming up here. So the scoop hasn't changed. We're looking at the same scoop. Squeezes everywhere. Is this the week we finally get something out of the squeezes, or is it more of the same crap back and forth? So optimistically, I am hoping we do get some momentum this week. So be patient here. Remember what we talked about last week, the two phases of the squeeze. There's phase one, the buildup of energy, and that's just plus one, minus one, plus one, minus one. Phase two, that's where the excitement comes into play. So there's nothing wrong with the structure of the market here. And if you're looking at the market from the perspective of, all right, I think over the next handful of weeks, let's just call it the month of June. If you're looking at the market from the perspective of in the month of June, I think we're going to new highs here. I think you stick with that perspective as long as we're still stuck in phase one of the squeeze. Obviously, say come Friday, we're dumping below minus one. It's a little bit sketchy. And at that point, the market is starting to lose structure. But as long as we're in the squeeze, and ideally, as long as we're above the 21, we're looking at a bullish structure here. So give the market a few days here, maybe even a few weeks. Give the market however much time it needs to get through phase one. And as long as the positions you're swinging are holding their structure, you should hold on tight here. So we've got the squeeze of the S&P 500. If this can fire long, thinking in terms of probabilities, a good squeeze should at least bring us towards 2 or so ATR. That's about, call it 43 hundo. So I think that's a realistic move there from the SPY for the Qs. The Qs. If the Qs can wake the hell up here, squeeze fires, 2 plus ATR brings you right back towards those previous highs. So I don't think that's out of question. Then you get the small caps, their daily squeezing. Pretty clean chart. And then I think the cleanest chart of all the indexes here has got to be the Dow. The super sexy, super exciting Dow. But that's a good looking structure. So for the indexes, everything checking on out here. If you look at the volatility index, this is behaving well, down under the 21. Keep in mind, once VIX is down here at these lows, you're going to get these little shakes. A day like that day, or even if you think of last week, what was that, Wednesday? Wednesday, the market's gapping down a little bit at the open. Volatility is spiking. But the key here is that VIX didn't keep pumping. It didn't go plus one, plus two. You got a cute little bounce Wednesday morning. It quickly faded. Back up goes the market. So, as far as last week goes, let me get y'all updated on a couple of swings. So, for Caterpillar here, Caterpillar's got a beautiful structure. And if you look at the industrials, XLI, Caterpillar being an industrial stock, this has a good structure as well. So XLI looks bullish with a daily squeeze, the stacked EMAs, all the good stuff here. And I've been a big fan of Caterpillar lately. So in the options room, we were putting on a couple of put credit spreads back here, and we took them both off last week for about 75% of max profit. We had a profitable trade, but Caterpillar still hasn't made the move we're looking for. Really, it's still stuck in phase one of the squeeze. We can't even get a close above plus one. So we didn't really catch a huge move here. It's just more so you're selling some puts at 235. You're bringing home a little bit of profit every day from premium decay. And then we did have short puts at 242 and a half. And the cute little bounce there Friday was enough. So, that's one of the benefits of the credit spreads. You don't necessarily need the stock to make a huge move. Keep in mind, that's the move I'm looking for. So even with the credit spreads, sure, if Caterpillar just goes sideways here, I'll bring home my premium. I'm still looking for the move into plus 2 to plus 3. But one of the benefits of the credit spreads is, as long as it holds up okay, you're going to get paid with the passage of time. So for Caterpillar, we had a profitable trade over there. That's kind of the move I'm looking for. Plus one, minus one, plus one, minus one. Then you get a legit move. So that was an easy trade. Those were two nice trades over here, but I still think Caterpillar has plenty of room to go. So Caterpillar, it's going to depend on where the market goes from here. But if the S&P 500 fires that squeeze to the upside, if the industrials, they continue moving higher, then I think you can get the 2+ ATR move out of cat. So I think this deserves a spot on the focus list. Going to be keeping a close eye on this one here today. If we get any little bit of a dip, I definitely am thinking about jumping back in there with a put credit spread. But two pretty good trades there from last week. And then for Google. So big Google here, got the daily squeeze. We sold the put credit spread. Now the day after we sold the spread, a little bit of a gap down here for Google. I imagine, and I've done this in the past, you take your position, you're getting shaken out, and then a few days later, there's the move you're looking for. Here's why I'm trying to be so hell-bent with y'all on some of the basics. This is what you should expect from a squeeze. As soon as you take your entry in a squeeze, have the willingness and the discipline and the patience to hold on through the +1, -1 shit. Because if you're getting shaken out, think of the squeeze over here. Beautiful structure. Everything about that looks picture perfect. That's what you got to expect from a squeeze. In that buildup of energy, it's just a whole bunch of numbing back and forth chop. +1, -1, +1, -1. Then you get the move. So you got to have that discipline and the patience. And a lot of this has to do with position sizing. You got to sit through the noise there. So pretty good move out of Google. She did dip a little bit last week to the 21, which, for those folks out there a little bit quicker than that could have been another good entry. But a pretty decent push here into Friday's session. That was all we needed. So we bought back the Google spread for about 75% of max profit. But same thing like Caterpillar, really haven't gotten the directional move yet. So with the daily squeeze in the SPY, the daily squeeze in the Qs, I do think Google here definitely has some more upside potential. So now it's a matter of where can we get that ideal entry. So that was a pretty good trade out of Google. No, I do have, which I didn't take this in the options room. I took this as I was driving down the freeway 5 minutes before the close on Friday, because I'm a professional like that. But I did add a little bit more Google here before Friday's close after taking the profits on the other trade. July 16th expiration, put credit spread with short strikes at 23.20 and 2300. But for those of you in the options room, we're going to keep an eye on this bad boy here today. We'll be looking for another entry together. So with Google, I think you got the timing here of the squeezes on the indexes. Squeezes on the indexes fire long. I think you can see Google at least into a brand new all-time high, maybe up towards +3. So I like Caterpillar, I'm liking Google. And then for the rest of tech stocks, because if you look at the Qs, this looks great. That's a bullish chart. Daily squeeze, histogram has gone positive. We're holding support above the 21, get the stacked EMAs. I think the Qs here are gearing up for a push back to highs. But if we're going to look to catch some of that action there, you want to pick your spots wisely. So there's Apple. I'm not a huge fan of Apple's chart right now. Apple should be moving hand in hand with the Qs. As the Qs get back above the 21, get the bullish histogram, as the Qs regain a bullish structure, Apple should be doing the same. But if you look at Big Apple here, we can't even get back above the 21. We don't got stacked EMAs. I don't think that's the cleanest chart. Amazon, it's just noise, right? So it's holding up okay, but you got no stacked EMAs. You can't get back above the 21. Just looking a little bit lame there. So, I do think Apple and Amazon, they obviously most likely make a move higher if the Qs go to all-time highs. But to me, they're not the cleanest charts. What I do like in tech, obviously, is Google. If you look at Facebook here, Facebook has been showing signs of strength. We're like a dip there to the 21. But what I do love still here is Microsoft. And what I love about Microsoft is it's still stuck in the dead middle of phase 1 of the squeeze. Google's trying to get on to phase 2 here. You're not quite extended yet, but you're not right there at that buy zone. Facebook, it got extended. It quickly pulled back, but that's kind of already in phase 2, or it's pretty damn close. But Microsoft, this is the tech stock right now that really mirrors the Qs. It's got a solid daily squeeze, but it hasn't made that push yet. Hasn't even thought about getting above +1. So if you're looking for upside in technology stocks across the board, I'm a big fan of Microsoft here because you've got all that upside for the squeeze to fire. So I think Microsoft is a beauty, and then you can check out IBM here. This is a beautiful squeeze. Get the stacked EMAs. I like an entry a little bit closer to the 21, so it's not extended. I like it on a little bit of a dip here today. And then one more squeeze I want to share with y'all. Going to keep the focus list focused. is Costco. Beautiful squeeze, stacked EMAs, green 10X bars, still pretty much in phase one here. I think if the market gets it going, Costco has a kind of structure, points towards a move towards 395, 400. So just keep it simple. Your whole thought process right now as a swing trader should be the market is in that moment in time where it's gearing up for a bigger than expected move. If the squeeze fires, and if we do get that 2 to 3 to 4 weeks of momentum, how am I going to take advantage of that? If you look back at the most recent squeeze, that's our job right now. We're stuck in phase one. Phase two is where all the opportunities are going to be if the squeezes do fire. So what your focus should be right now is how am I getting positioned to take advantage of that potential upside? And I think you do that by just focusing on a few good, clean setups in a sector that looks clean as well. So for the tech stocks, right, the basket itself, the QQQ, XLK, it's a pretty bullish structure. Daily squeeze, it's above the 21. It's still in the buy zone. That looks good for a move into new highs. If you look at, say, the industrial sector, this has clearly been a leader, and it still has a bullish structure. I think that's good for a move to the upside. So you get the timing with the squeezes in the indexes, you narrow the focus list down a little bit by looking at the individual sectors, and then you pick a few here. You know, what I like about a Caterpillar is you got three things working in your favor. All on its own, that's a bullish chart. So putting aside the squeezes in the index, the squeeze in the sectors, all on its own here, Caterpillar looks pretty promising for a move into brand new highs, 250 plus. Then take into consideration, we have the timing here where not just Caterpillar, but the sector that it belongs to, this looks promising for a move into new highs. And then, of course, we're taking into consideration the entire market. That's looking good for a move into new highs as well. So because you got the timing here with the markets, the sectors, etc., I think you got to focus on a couple. Caterpillar to me looks really clean. I think MMM. Whoa. Come on. That's a beautiful chart. So Caterpillar, Triple M, IBM, beautiful chart. Costco, beautiful chart. And then for the tech stocks, you got a little bit of Google here. Now the ideal Google entry, for me at least, is back here because you got a fresh squeeze. We've already fired the squeeze. So with Google, you're looking for continuation of the move. With Microsoft, you're looking for the beginning of the move. That's the easy move. That's the most powerful move, is when we're coming out of phase one. So that's my focus list, y'all. Microsoft, Caterpillar, Google, IBM, Costco, and Triple M. And to be honest with you, we could go through scans and charts here for hours this morning. There's plenty of good-looking squeezes right now. They all need the market behind them. So Pepsi looks good. So does IBM. And they're both probably going to go higher if the market goes higher from here. They're both probably going to go nowhere if the market goes nowhere, and they're both probably going to crap if the market craps. So you don't need to focus on 5, 10, 12 different setups right now. We're pretty much looking at the same setup across the board. The individual stocks are squeezing because Big Mama is squeezing. And as the market goes the individual stocks. So keep things simple, my friends. And for me personally this week, I'm going to be flying out to Florida early Thursday morning. So, not going to be able to actively trade too much this week. But I got the position in Google. I really want some Caterpillar. And kind of put on a couple of swing trades that I can manage while I'm on the road, which with the credit spreads and the 30 days to expiration, they're not too tough to manage. But that's a focus list, y'all. So if you want to go through any charts, you got any questions, we can do that here. Jose, good question. So I'll open the credit spread. Mind you, I focus basically on a daily chart only. So, the time of day, the time of week, the candle itself, I don't too much take that into consideration. Pretty much my focus is, and you get the squeeze here for Caterpillar, as long as we're in the buy zone, we're not above +1, we're not under -1, rather we're right near that 21 EMA in the squeeze, I'm going to look to take my position. And I'm going to hold my position as long as we're within +1, -1. So, a red candle, for example, here on Caterpillar. I might take an entry on that given day And I'm going to hold on there because we held up structurally. If we start dumping towards -2, then I don't like that entry too much. So for me, it's just more so, all right, I don't care what day of the week it is. I don't really care the time of the day. Is the setup still intact? Are we still in the buy zone? Perfect. Let me plant my seed there. Yeah, Tim, good observation. You get the triple witching. When's the 18th? A couple weeks? Yeah, next Friday. Which that'll be interesting to see how that plays a role as we kind of get through this week. Thoughts on Visa? Visa's just waiting on the market right now. Right? It's got the structure, daily squeeze, stacked EMAs, the histogram goes positive, but it's doing a bunch of nothing here. So it's just like Microsoft. It's just like Pepsi and Costco and pretty much everything else we looked at this morning. It's a bullish looking squeeze, but it's a stock going nowhere because there's no market behind it right now. So Visa's best chance of firing this squeeze to the upside is going to be dependent on the market here. If the market goes nowhere, as good as Visa looks, probably continues to do the same back and forth, which, if you sold an out-the-money put credit spread, that's okay, but it's a good structure. So that's a good example of the kind of setup I think you want to focus on here. It's going to do nothing until the market makes a move, but because of its structure, if the market does make a move higher, I think Visa follows it nicely. So I do like it. Yeah, Brian, open the markets. Long weekend. Samir, good question. So here's usually my mindset as far as, out the money, in the money. I do want to lean into the probabilities of the credit spread, but I still want to get a good risk reward. So with Visa, for example, here would be my mindset. I like the squeeze. I want to trade the squeeze. I'm going to give it a good, usually 30 to 40 days to expiration. And then my initial mindset is, how far out the money can I go? So with a put credit spread, how far under the current price can I go with that short strike and still get a 3-to-1 risk reward ratio at the very least. So ideally I'm looking for 2-to-1 / 3-to-1 risk reward ratios, and I'll go as far out the money as I can while still getting that risk reward ratio. So for example, maybe an extreme example, but if I could sell the 225 put and still get a 2-to-1, I'm going to do that all day long versus, selling the 228. I like to go deep out the money, but I'm only going to go so deep as I can and still get the risk reward. 2-to-1, 3-to-1. All right, yeah, Mark. So Mark touched on that a little bit. 25, 30 to 40 days. Call it 4 to 6 weeks. But keep in mind that that's mainly because I'm focusing on a daily chart. So instead, say I'm coming into today's session, I'm looking for a 30-minute squeeze on Google that I think can fire to the upside this week. Well, then I would probably do this week's expiration. But with a daily squeeze, I like to give it a few weeks to, kind of heat up and get going, and then another few weeks to potentially make that move into +2 to +3. So usually 30 days, that's pretty much the sweet spot. And keep in mind, y'all, if you're new to credit spreads, oftentimes folks will think, well, man, if I'm selling a spread and it expires in 30, 40 days, I'm going to be married to this position for 30, 40 days. It's not really the case. A good example is this Google trade. We took the position over here, and we had a little bit more than 30 days to expiration when we took the position, just around 30 days. A few weeks into the trade, we caught a decent move, about $100 to the upside, but a few weeks into the trade, you're looking at 70, 75% of your max profit. So, if Google does nothing but go sideways for 30 days, yeah, I'm going to have to hold on pretty close to expiration to bring home some premium. But if you give the trade 30 days and a week or 2 weeks in, it makes the move you're looking for, or part of the move you're looking for, you're going to bring home some good premium. Marco, thoughts on AMD? Marco, the one thing working in AMD's favor right now is the semiconductors are showing signs of strength. So they were getting beaten down over here, but very much like tech, they're quickly back on their own 2 feet. So they're back above the 21, they got stacked EMAs. That's what's working in AMD's favor. The semiconductors look really good. Now, for me personally, AMD doesn't quite fit my criteria. It does have a daily squeeze, and I mean, it kind of made the move. Right? Daily squeeze at the 21, big push into +2, coming in a little bit. But for me, I like to keep it simple. So I got my pre-flight checklist of pretty much, the same thing as I'm looking for with every single trade. This doesn't have positively stacked EMAs, so for my strategy, it's just an automatic no trade. So not my favorite looking chart, but this is what is working in AMD's favor right now. The semis are showing signs of life. So should the semis push to new all-time highs here, even if I don't like the chart, AMD's probably going to go higher. And it makes sense, right? Because as the semis rebound here for the last 2 weeks, well, even if it's not my favorite chart, what has AMD done? It's rebounded beautifully. So semis keep going higher, AMD's probably going with it. And Samir, as far as the win-loss ratio goes, we actually got a spreadsheet together from the options room with every trade we've taken so far this year, and we're coming in at almost an 80% win rate. So that spreadsheet is something we should be able to share with everybody pretty soon. But there's like the most recent example. So far, first 6 months here, for the trade alerts I've done on the options room, it's about 77% or so. More importantly, though, than the win rate, which is definitely important, and I promise we'll get the spreadsheet to y'all, but if you had taken every single trade alert I've posted in the simpler options room so far this year with one contract, I think it's about $8,000 of profit. And I think you could take one contract per trade of these kinds of trades without too big of an account. All right, let's get through a few more here, though, because we are creeping up on the open. Crocs looks beautiful. Never thought I'd say that about a pair of Crocs, but this is a good-looking one. Daily squeeze, stacked DMAs. What's the one thing missing here? The market is going nowhere. So Crocs is going nowhere. As soon as this market can heat up, that's when you want to see some action. But structurally, that's a beautiful chart. Let's check out Yeti. Jason, here's another picture-perfect example. Beautiful squeeze. It's got no wind at its back right now. So this is such an important, and keep in mind, there's going to be times where the market is going nowhere, and you can find a squeeze on a stock, and the squeeze can fire, and it can kind of move regardless of what the market is doing. But more often than not, thinking in terms of probabilities, this is going to get going here once the market gets it going. But I think that's a good-looking chart for sure. And that's, I don't want to call it the difficulty, but hopefully we're all on the same page here. Because believe me, I've done the scans this weekend. There's no shortage of beautiful squeezes. So we could sit here, for hours this afternoon looking at Yeti and Crocs and just going through good-looking squeeze after good-looking squeeze. But the major thing I'm trying to drive home right now is, one, you don't need to trade all of them. You just need a couple. But the most important thing is, this is what we're waiting on. Everything's gearing up for the move higher, but it's probably not going to happen until the market gets it going. So that's the most important chart right now. And if you're swing trading something that looks like Crocs, it looks like Yeti, it looks like an IBM or a Costco, I think you're exactly where you want to be. You planted your seed in a good-looking chart, a good-looking setup, you get the high probability squeeze, and we're just waiting on the market now. So it should be an interesting week. But the only other thing I'll add is the patience aspect. I found that so much easier, with this mindset of once I take a position in a squeeze, I fully expect this kind of crap. It's going to be +1, it's going to be -1 until finally the energy gets released. So, give yourself the time and give yourself the flexibility to hold on something like a Yeti. +1, -1, +1, -1. It's a pain in the butt, believe me. But structurally, It's what you should expect from a squeeze. And as soon as the market fires here, if it does fire, I think things like Yeti and Crocs, they're looking good. They're looking good. I'll do a few more here, team. APO. See? Perfect example. Right, there's another one. This looks so sound. Right? Great looking squeeze. But for the last 2 weeks, it's doing nothing but collecting dust. Simply because the market is. So here's another one. Market gets going, that looks perfect. And you can throw EA Sports into the same mix. It's a bullish looking daily squeeze that's just chopping people to pieces here. Soon as the market wakes up, it's got that look to it. It's giving you that look from across the bar. It wants to party here. Just waiting on the market. So based on the tickers y'all are throwing at me here, I think you're all focusing on the right stuff right now. Big picture thinking, this is what's driving the bus. Daily squeeze on the indexes. If we get into phase 2, these are the kinds of things y'all want to focus on. Crocs, Yetis, IBMs, Triple M's, Costco's, Caterpillars. I think we're all on the same page here. So be patient this week above everything else. And let's see how the future's looking here. Not much happening. Nothing happening out of the Qs. And the S&P 500 is up a blistering 0.02%. So pretty quiet futures. But listen, y'all, I'm going to cut you loose here. Opening bell here in a few minutes. So we'll be back on Wednesday. We'll do it again. But until then, just be patient. Believe me, I, like everybody else, would freaking love if the market's got something going here, but the market has no idea I exist, and the market has no idea that all of you listening in exist, so we got no choice but to be patient. But go get them, y'all. I'll talk to you soon. As always, appreciate your time.